it just we just need to know how the big boys works, what kind of thinking that they want. What do they want? Basically, they want to make profit. But how do they make profit in the stock market? They need to sell their shares to someone else. Who are they selling it to? They need to sell it to the retail investor. That's how they make profit out of it. So how do they attract them to come in? By creating a lot of pump up price, fear of missing out, as usual thing that you always hear. Those are the things that they are looking into it to attract the retail investor. So how to attract you to come in is by creating technical signal such as resistance breakout, indicators, and of course indicators, and what else, technical or news, all sort of things that can give you that kind of confidence. So that's how they sell the shares. They attract the buyers to come in. So that's why when there's a few stocks that they have resistance breakout, sometimes why you see resistance breakout but the price is not marking it up higher is because they have successfully attracted enough of buyers coming in so that they are queuing at a lower price so that they are able to throw it down to them. So why does it fail? Because they have enough of buyers are in, so that's why they throw it down. And they are not going to mark the price up high. So that's why the resistance breakout failed. Or maybe after the resistance, you see it will have a pullback. Why do they have a pullback right after that? Because there's enough of buyers are queuing at the lower point. Because like retailers, retail investor, we don't enter into stocks by taking the high price, because if the price already move up, I feel like, oh my god, the price is already too high, I don't want to enter at the high point. So you would think that, oh, this is the fair value. Retail invest, okay, the market is all about the big boys expectation, and also the big boys expect the expectation of the retail investor. So retail investor always expect to buy at the lower point and sell at the higher price. They always have the mindset of there will be a higher point that is their take profit target, and then they always think that is fixed, and they will try to have their entry price as low as they can. So that's why they always park at the lower point, at the buy price. So when they park at the buy price, at the lower buy price, the big boys can see all this from the buy sell queue, who are adding in, who are adding out, which one of them is their shares, their units, which one of them is the retail investor units. So they work from it. So from there they will see, okay, there's enough of retail investors are parking at the lower point. So what they do is cancel their orders and throw their price down lower. Okay, so that is how